Oh, good Larry move so you can.
Yes, coffee over here.
Some time for coffee. We're like,
Last you want coffee?
well, if we're not meeting tonight, I'll just go ahead and get going.
I'm so excited about
So,
Well, good.
this. This was a good audit.
This was a good audit.
do you have any
Except
plans
for
for Memorial Day?
I got it.
But that,
Well, I thought I did.
that's a default
But it looks
comment.
like I do.
That's
Yeah.
that will always be there.
Always get
Call a friend ages ago
It was not something we,
called and said he was going to come up and
well, that's not the
in a
idea.
mobile.
The idea is,
Oh,
if your
okay.
community association, I mean, you're gonna have. You're gonna have. It's just, unless you're in one that's in Beverly Hills that's pumping in
So
all
he's
the money.
flying up and he wants to spend time with me like about 5 days.
That's a long time.
I know, so he's flying in tomorrow.
They're probably doing all right.
Is he coming into Bellingham?
No.
Seattle.
then
No.
they, yeah.
There's a former student
The 10 piece.
Hi, Udo.
Well, great to meet you.
who plays the band.
The guy first said it's $1,800 for 7 years.
Okay.
But you know what, I think that in that HOA,
Before we start, could I ask everyone at the table, hey, before we start, could I ask everyone at the table to silence their phones?
Yeah, and the audience too, please silence your phones.
Hang on.
They're not on. That's not an appropriate sign yet, but it's a good sign to have. Okay, let me start the recorder. Just a quick thing, I might as well break the flow and just say, forever and a day, we've been recording with this microphone and this tape, and now that we have a real recording, video as well as audio, we may no longer do this, but that's not a decision that's been made, but that's certainly an appropriate thing to consider because it's just extra stuff. Okay, we are back in session. It's looks like the clock says it's about 9 after 7. And the next item, we've had the closed session, there's no voting, and the next,
Need to do the agenda with this.
we skipped and did not do adoption of agenda, so let us do adoption of agenda at this time. Are there any changes or ideas regarding the agenda? Seeing no one make a motion or... Oop,
Mr. President,
Yep.
do you have to leave as soon as you're done?
I don't have to.
I was wondering if,
Microphone, Mike, could you get your microphone, please?
I was just wondering if it'd be economical if we jump to financials under treasurer's report. So, no? Okay, I gotta know, never mind.
I was just gonna say, we have the auditor's presentation is number 9 on the agenda, and the items between that
Yeah.
and now is gonna be pretty quick.
It's going to be pretty quick. Yeah, I don't want to delay the auditor's report any more than necessary myself. Any other suggestions? Okay, then unless there's an objection, I'll rule that the agenda has changed to move the adoption up after open session and voting is adopted by acclamation, and that leads directly to announcements. Are there any announcements at this time? Yes, sir.
The safety fair was held last Saturday. All the vendors except 3 showed up. Unfortunately, we had a poor showing as far as attendees are concerned, roughly around 50, give or take. So we'll have to do some head scratching as to how to rectify that for next year. Thank
Okay,
you.
thanks. Yeah, after action reports, always useful. Any other announcements? Yes.
Hi, N&E still has an opening. We had one of our members resign this year, and I still have a volunteer till the end of the year that we need. We have an opening on the N&E committee.
Thank you. Okay, if there are no other announcements, let's move to property owner comments and any board comments. Yes, sir. Why don't you go, no, we can, somebody, yeah, but we need the mic. We need the mic, so I want to bring the mic to you. Thank you, sir.
Oh, careful, it's on the edge of the,
I'm not sure it'll reach that way around the box.
I think the podium's sitting on it.
Well, the first thing I wanted to say is, it's not what you think. I spilled coffee here.
That's, we'll try not to step on it.
Oh, okay. Les Bjergstam, lots 83 and 84 in Division 28.
Could you speak into the mic?
Oh, I'm sorry.
You're not in the camera's view, Les. Why don't you just go ahead and sit down? You don't need to stand up.
Oh, that's good. I won't spill my coffee again. Well, I had an interesting thing happen to me the other day. I wanted to go down and out through exit 28. And of course, I had the van. And I understand all the problems with that road, so I'm not complaining to anybody. But I've been trying to think of, is there anything that we could put on a little sign, any verbiage, or anything we could do? Because what happened, I got down, where I could see, and the others could see me coming down, and they still kept coming. A little car came up, and another little car, and 3 of them came up, seeing me there, knowing they couldn't get through. And I thought, there's got to be some way we can communicate. It can't be visual. I thought, could we put a sign up that says something like, at the bottom and top, if you see someone coming, do not enter. I don't know.
I know, I understand what you're saying.
Yeah,
real
I don't
quick.
know what
It sounds like a sign saying narrow road, passage difficult, something along those lines. Yeah, got it.
Yeah, and of course, if you have 2 small cars meeting, it's all right. But it ended up, one of the guys in the small car did get around, but the other 2 had to back down. So if there's any verbiage we can think of to put on a sign, or any device like a button you could push that would give a flashing light for a minute or 2. And so I just wanted to suggest that as a possible.
Thanks, Les. That's a great idea.
I'll just stay here.
Okay, are there any other homeowner comments? Okay, seeing none, I will then move to, let's see, consent agenda. There aren't any consent items, and we'll go straight to the auditor's presentation. Thank you for coming.
Yeah. Thank you for having me. I've seen most of you before. I'm Keaton Werson. I work at Larson Gross. I'm a senior manager there, focusing on nonprofit work. And that's a big chunk of what I do. I work with a lot of companies too. But about 10 years ago now, you guys became a nonprofit, and certainly there's a lot of homeowner association things that kind of blend in as well. And so it's kind of a tag team approach in our office. Jason Perry had been, since we started working with you, kind of the main point of contact. But one of the things we try to do within our firm to avoid you guys saying, well, we want some fresh eyes, and let's go to a different firm, is to shake things up within our own office. And so starting last year, Jason brought me in as kind of the main point on the audit. Said, let's look at this from a nonprofit side. Let's make sure that there's no unrelated business income, that there potentially have taxable impacts, and kind of shift the focus from, okay, we got a good bearing on homeowners association, let's make sure on the nonprofit side. So that's kind of been my role now for 2 audits. And so this is much earlier than we've been finished in the past. And so at the end of last year, Jennifer said, well, and by the way, I'm pregnant and I'm gonna have my baby right before tax day. Want to come audit us earlier? And it actually worked out. We had another client who wanted to move later, and we just kind of did a swap. And so we were here in February to do the audit. Most everything was done while Mitch was on vacation, and then we circled back for a day and handled everything we needed to do, conversations with Mitch and the like. So the audit's actually been done since the end of March. And beyond just being early, I call this a very successful audit. I said last year that it was a big improvement from the year before. Now, my reference at that point was just reviewing the prior year because Jason had been really in it. But even what I saw last year was a lot cleaner. And now to see Jennifer with a few years to kind of go in and clean up everything, it's the financial statements are looking really good. So you can get to a point of comfort where you say, and I think we were here last year, where it's like, from where you were a few years ago, the financial condition and collections and everything, last year was great. This year I'd say is even better. And so if you flip to page 3 of your packet, you've got our, looks like it's front and back. It's a 2-page, mostly 1-page management letter. So if you go back in time a few years, those who are on the board, you can remember the multi-page, here's what you got to work on. And I'd say unlike many nonprofits or homeowners associations I've seen, Mitch, Jennifer, the board, took that to heart and said, let's improve and let's get rid of these. And so those have really decreased until last year when it got down to 2 comments. And now this year we're down to 1. Carol said at the start, well, you've got to earn your keep and have at least 1. And that's kind of true, but at the same time, the comment that remains, you're going to see in every homeowners association, community association. We have big projects that need to be done at some point. We got to fund them. What are you going to do? And so this is, from where you were a few years ago, this is nitpicking really. This comment's not going to go away. It doesn't rise to the level of being a significant deficiency or material weakness. Those ones that you did have a few years ago. This is what we call just another comment. We want to make sure you're aware, but living and being part of a homeowners association, I'm sure you're aware that, yeah, there's things to do over the next many years. So that's been most of our meeting in the past is going over that. That's all I have on the management letter. So that allows us to flip to the financial statements. I just want to point out a few financial highlights. I'm not going to go page by page at all on this. You guys have it in the packet and certainly can go through that in detail. Reach out to me if you have questions, or first and foremost, Eva, Jennifer, when she gets back, and Mitch should have majority answers. I'm certainly a reference too if they're not sure how to answer something. So you see the page number of your packet, but also you can see right above it is the financial statement number. That's what I have in front of me, so I'm going to refer to that. So flip open to page 3 of the financials.
Or page 9.
Yeah, our page 9, with the word balance sheets at top.
Perfect, yes.
Okay.
That's right. So there's a lot of things on here that you could have a question about, I suppose, but the things that jump out at me really, if you go about halfway down the page in the assets section, you see that parcels and lots held for sale line. This year is 62,000, last year is 172. That line had stayed relatively consistent for a lot of years, and those are those many lots that are held by the association where, while you guys were working out a plan, what are we going to do with this? And so as there were some that came in, as there were some sales, that number would fluctuate a little, but never all that much. And so that big dip this year, if you look just a couple lines above, you'll see that 86,000 in current assets. And so what we did this year was go through and look at all those that were taken over, deed in lieu taken over and brought into the association, as well as those that were sold. But the biggest thing, and the reason for that 86,000, was looking ahead to January and March. January, the couple sales, and then March, the big auction, where a good chunk of those were sold for a good chunk of money. And so we wanted to break those out and show current. Those were going to be realized into cash in this next year, and that's the reason for that big change. And then if you look down on the line that says construction loan, down the liabilities, $2,870. That I just want to point out because my understanding going in was you hadn't drawn on the construction loan. You got it before year end, but those projects that it was going to be used for starting in 2018, and that's true. This is just related to those issuance costs up front that were not paid. They were just rolled into the loan. So the costs of obtaining the debt are considered debt because at some point they have to be paid off. So that's really what that is.
Okay.
And while we're talking about it, go ahead and flip to my page 10, which I assume would be your page 16. 14? See, without my calculator, I'm nothing.
10, our page 16.
Oh, I got it.
Good job.
Keeping me honest, Eric. So at the bottom there is the construction loan. So even though there haven't been draws, we wanted to put this in here and show what the plans are, kind of combine a subsequent event, things that happened after 2017 with what was happening. So between this and then just a few right up in note 3, right above that, the two really describe what the plans are for 2018. So we've got the construction loan, here's the terms, and here's what we're going to do with those funds. And so instead of, this happens, we're almost 5 months after year end, which is 17 months after the start of the year we're looking at. And so instead of trying to constantly look so far back, this was our attempt to say, yeah, this big plan is in 2018, but let's not first be looking at it in the financials, whoever's reading these, in 2019, let's look at it now. So nothing specific in there I'm pointing out other than to read it, make sure you agree that everything's factually correct in there and that we're not missing anything that you know about. Okay, so we're doing a little jumping. Go back to my page 4, your page 10. Did I get it, Eric?
Revenues and expenses, right?
That's right. Okay. So this is the Homeowners Association word for your income statement. If you're looking at a company's financials, that's what it would be called. Excess of revenues over expenses down at the bottom is net income. The reason it's not called net income, even though it really means the same thing, is you're not thinking of it like net income. We're not trying to generate a profit. We're generating enough to put back into the organization and keep things moving along as they need to be.
So that's kind of a nonprofit terminology.
That's right.
Okay.
Yeah. In nonprofit world, they use net assets. It's another same sort of deal to make it sure you know it's not net income. But in homeowners associations, it's just a slight tweak on it.
Okay.
Yeah, it's kind of interesting. Quick side note. As a nonprofit, homeowners are the only ones I'm aware of where the rules, when you have two rules that are the same, the homeowners trump the nonprofit rules. And so things like this with naming conventions, you go with the homeowners. There's potential, there's a lot of swings in here, so certainly we'll open it up to questions and I can hopefully answer some, but I just want to point out a couple of them. To me, the big one is if you look down in the expenses line, you see that outside services jump up from 490,000 to 739. So to me, I say, whoa, that's a big jump. That also wasn't reported to you throughout the year in the financials. This was an audit adjustment that we had. Jennifer put together support for what she had done. The barn demolition and the rotunda demolition had been capitalized as assets during the year. And when we got here, we dug into her support and then did our own research and ultimately had some back and forth and came to the conclusion that under accounting principles, you're really not adding to the life of your land. It's not an improvement to the land. It's just getting it ready for whatever's next. We did find kind of a loophole that if you tear down something within a reasonable period of time of buying it. So you buy land with the intention of tearing down the building, you could capitalize it all together. But we all agreed that 40 plus years wasn't a reasonable amount of time. And so that big chunk of money, which in total was pretty close to 200,000, shifted from the balance sheet over to this outside services. So if you take that out, which you don't need to, but if you do, now you're within a $40,000 swing of last year. It's pretty consistent. And then an interesting line, and I think it's a little bit confusing, but it's also good. It's the second to last one down there, bad debt recovery, right at the bottom of total expenses. So in most companies, you'd be used to seeing bad debt expense. That means, if we have a 90% collection rate, in your case, 95, 96% collection rate, every year you'd expect to have a little bit of your accounts receivable being written off, those amounts that you're not collecting or you don't expect to collect. And what this really goes back many years to when there wasn't a good collection process in place and collections were much lower than they are now. And we came in 2014, worked with management and said, all these old outstanding, what do you expect to actually collect? And I think at that point there was a very conservative estimate put on it and said, we don't expect to collect very much of this. And so back in 2014, $1 million plus of accounts receivable got written off. Is a balance sheet only. It doesn't mean you stop trying to collect that. Just in here, we said, let's recognize that loss now. Let's get this off and say, it's there, we're gonna try to collect it, but we really don't know if we're gonna. And so if you go back a few years, you see that number be a very significant positive number, a big expense. But management said, we're obviously not gonna stop trying to collect it, and has had increased efforts trying to get that money. And so as those previously written receivables have been collected, now you're seeing those amounts that are written off become positive. So those negative numbers really mean you're collecting more than you're writing off.
Okay, so that negative actually reflects the fact that we have collected more than we expected to
Exactly.
collect.
A negative expense is the same as a revenue up top. And that number isn't even the full amount of collections, right? Because you're not at 100% collection, so you have that bit of write-offs every year, and those net with the collections. So that number is the net total. Did I get you there with the negative expenses of revenue?
Yeah, a negative is a positive.
Let me tell you more about negatives. Any questions on that? Anybody dare? All right.
Actually, I do have one.
Yeah, Larry.
And obviously, I'm not an accountant. That's why I have this question. Do we have, could you explain a little bit the gain or loss on lot sales?
Yes,
Revenue
Yep.
on that same page.
Yeah. So back to those parcels that we looked at on the first page, those parcels and lots, that's at some point when they are acquired, they're assigned a value. And that value doesn't change over the years, just like other fixed assets. It sits there. The cost or the value may fluctuate up or down with the market, but so that all financial statements, anyone can look at anyone's financials and have some sort of consistent basis that doesn't change based on valuations. Just what'd you pay for it or what'd you assign to it if it was acquired deed in lieu. And so there was quite a few sales of lots during 2017. Mm-hmm. And so whatever came in, whatever the sale price was, you would compare that to the cost and either have a gain or a loss. And so if the sale price on a lot was $10,000 and the cost way back when was assigned as $2,000, you'd have an $8,000 gain on that individual one. And so all the sales combined resulted in that $20,000 loss. It's kind of it's an arbitrary number. The real cash flow from it, let's see if I can find that. Yeah, let's flip to page 6. My page 6, page 12 of your.
Right, 6/12, okay?
Get that figured out next year. You see halfway down the page there, cash flows from investing activities, proceeds from lots held for sale of $64,000. So that's the cash that came in from those sales. And so to have a loss of $20,000, you'd say, okay, what's $64,000 plus the 20? those lots were on the books for about $85,000
Okay.
over time. And so that number, however they were acquired, if they were purchased, or if they were acquired in lieu, or if they were donated, that's the value that had been on the books.
Okay.
Yeah.
Okay.
Okay. Question I've got. So normally when we look at a past year like 2016, those numbers stay the same from the prior year. There's a change from our last audited statement from you guys.
Oh, yeah.
To the top, the dues and assessments and the capital expenditures, there's a $36,000 change there. And normally, don't those numbers stay the same from a past year?
Linda,
and
could
why?
you direct our attention? What page
understands
should
what
we
he-
be looking
I'll,
at?
I'll point at. So at the top of page 4, your page 10.
410, yeah.
Oh, it's comical. At the very top, the dues and assessments general, under 2016, it says 1.524 million.
Yeah.
She's got a copy of last year's audit,
Right.
in which it has a different number, 1.489.
Okay.
So a $36,000 difference. You didn't point out, but I will, down at the very bottom number, that bad debt recovery of minus 96,744.
Right.
Last year's financials, it was minus 133, the same difference. When we went in this year and identified what's that account that's netting with dues and assessments, we realized that it wasn't, let me back up a little bit. When there are amounts during the current year that are written off, so current year assessments that aren't going to be collectible, those amounts, like I said earlier, should net with that bad debt recovery. Last year, we didn't. We accidentally netted them with the dues and assessments. Bottom line revenues over expenses was all the same. But this year, when we caught that, we said, well, let's move that to the correct line, move down that bottom number, and show the dues and assessments at what they really were.
Does that change from the mistaken reporting in 2016? Does that require us to make a change in our books, and has that already been done?
The only change in the books is to move the grouping of the general ledger account to the right spot, which has been done.
Right, there's not a cash difference, it's just where you book it.
Exactly.
But has that been done?
It has been done.
It has been done?
Yes.
Okay.
I want to show you guys a way to always know that. To ask us every year, hey, what were those changes this year? So if you flip to my page 9.
915. Simple math I can do.
So if there's ever something that does impact the bottom line, it's going to change net income, we'll let you know way ahead of time and possibly restate the prior year financial statements if there's an error of that caliber. This is what's called a reclassification. So on my page 9, you see middle there, it says reclassifications. Whenever there's something where all we're really doing is moving something to match how it should have been this year, how it was this year and how it should have been last year, we will add that one sentence there. It says reclassifications, certain prior year reclassifications have been made.
So you don't normally point out what you've done because it's pretty minor.
Exactly.
Okay.
But I think it's fair for you guys to say, what was it? And so if you circle that, and remember, if you ever see that, that means something like that has happened. You'll always have that when there was. And like that, they're usually minor that aren't, they're just showing, hey, let's move that from a revenue line to an expense line or something like that.
Cool, thank you.
Yeah, you bet.
That's fine.
Okay. Okay.
Next page.
All right. Any more questions on the statement of revenues and expenses before we move on? Okay, we can certainly come back to it. So the last main thing I've got is on the statement of cash flows, my page 6. So with accrual accounting, this took, Vanessa and I went to school together, and she can probably attest, this took me too long to understand accrual accounting. But
You should never give that up.
I
Don't
have
admit
to,
that.
I have to help you understand that if I get into on a roll about accrual accounting and you're not alone. it is a tricky thing to pick up. And so when you talk about having receivables and payables, all I'm hoping is that little bits are sticking. And luckily, a lot of little bits have stuck over the years for me. But this statement is kind of useful because you can say, you don't want to just look at your cash flows, but if you have a decent understanding of the accrual accounting, then the cash flows can kind of complement that. And so what I want to point out here is that first bold line, almost halfway down the page, says net cash provided by operating activities. What this is doing is it's taking your net income, which is the very top line there, 436,000, and saying, well, that's great, but what's that mean as far as like balancing a checkbook? If that's our mindset, how can we go from thinking of this as accrual net income to what's our cash really doing? So it backs out things like depreciation, which is non-cash, right? You bought those assets way back when. The cash has already gone long ago, and now we're finally recognizing the expense. And so we move around all the accrual-related things, and then we come down to those cash provided by operating activities, and that's really all the assessments that came in, you take out all the salaries and all those things we're actually paying in cash, what's left over. And so you're, as a homeowners association, you're always going to want to have a positive number there because that's showing we need to generate that to do all the other stuff we've got to do. We've got to pay off any debt that's upcoming. We've got to continue to improve infrastructure. So to have numbers that big, 1.3 million, 1.5 million, is showing that you are generating enough to do those things that you need to do, or at least generating a significant amount. And so then you go down below and you can say, well, that's great. That's what we're doing. That's how we're operating. What are we doing to invest in ourselves? And that's where you can see all those investing things, purchases of fixed assets, building improvements, construction in progress, and all those changes. So negative numbers there are in a large way a good thing. It means we're using all that cash above to invest in ourselves and build up things that needed to improve. And then that section right below doesn't have big numbers yet, but it'll start to once you have that construction loan build, and that's called financing activities. You need your operations to pay off that debt that's coming. So normally, yeah, I glaze right over the cash flows, but hopefully that provides a little bit of insight.
It does, thank you.
Good. All right, so the notes to the financial statements are riveting, but I'm going to let you read them on your own. You're welcome. And just kind of bring up 2 more points. So the 990 is what's next. That's the very that's where the nonprofit comes in. That's a nonprofit filing. I'm not sure if you're aware, that is a publicly available document. So you can go on sites like guidestar.com and see your own. You can do what I do. Whenever I have a question, I'll go pull up other homeowner nonprofits and see what they're doing for something. It was a good way when I first came in and said, all this golf revenue, is this really okay? Not be taxable? And then go look at a lot of how the other ones are doing it and point me in the right direction how to research. And turns out it's just fine. But yeah, just bring that up. Guidestar.com is a great resource. But that's coming later. Before Jennifer left, she said, contact Eva for anything, keep things moving, but I want to be part of the 990. So as soon as I get back, I'll be calling you and we'll get started. So that'll be done in July and then done in time for the August board meeting is the plan. And my last piece is just related to the status with us. I'll be working with Jennifer and Mitch to figure out what's next, and I assume they'll be working with you guys, but this is the final year of our 3-year proposal, 2015, 16, and 17. And there's a lot that goes into decisions, but having been now working with you guys for 2 years, I hope to continue on. And with that, that's what I've got. Any questions?
Thanks. I guess your hand is up. Go ahead.
Anybody else want to go first? I have a strange question. We get on page 1218 is we always get a balance, an available balance from you that you've done. And I wonder why it never matches with the net available cash we get in our capital reserve fund reports that start, with this is what's available here.
Yep.
But why do they never match?
Solid question. This is a approximately 30-hour question that I spent working with Jennifer in March because I said I'm tired of not having a full understanding of this. Every year there's questions from you guys and from us, and it's like we can get them close enough that we're comfortable, but I want to make sure, not just that it's right, it's right, but that I know why it's right.
Right.
And so we dug into it, and I reconciled those roads and capital accounts and said, how can they be in some cases so far off. And Jennifer helped me understand your schedule is, she calls it a modified cash. It's cash moving. It's kind of like the statement of cash flows. It's what cash is doing with a couple little tweaks she puts in there to show, like if in December you have a commitment to pay for something, she'll put in the occasional payable. But mostly those numbers are cash. Whereas what we're showing in here reflects all of the payables, all of the receivable activity and accrual.
So that means it's going to be different.
That does mean it's going to be different. We toyed with the idea of reconciling the two. She said, yes, but let's not put it in here. If anyone really wants to know, she can provide that. And so that's kind of where we landed. But I would always expect it to be a little different, in some cases a lot different, but always be able to reconcile. And if you can't, that's when you have an issue.
So you have, in fact, seen that difference that Linda's referring to, and you understand what causes it, and that it is fully explained.
That is accurate.
Okay.
It is. It's just strange that you see it, and it's not just this year, it's every year, and sometimes it's just, why is it so different? That's all.
Well, that sounds like a reasonable explanation to
Okay.
me of why it is so different. And again, just direct you, ask.
So all I have to do is
ask
go
to-
down to accounting and go, okay, explain this to me. That works. And my last question I have is your note number 11. Can you talk to us about that
Yes.
a little bit, please?
Yes, and I will give you a little bit because I don't want everyone to fall asleep on me. Back in 2014, and actually for a long, long time, probably back when we were in school, Vanessa, there were so many different revenue recognition policies out there. Software companies, homeowners associations, nonprofits, a crazy amount of different standards saying this is how you recognize revenue. So it's purely book, how you're recording things in the book, not directing your cash flows. But for financial statements, how are we going to record revenue? And in international accounting kind of got together and they came up with their own policy that governed everything. And the US toyed with the idea of joining international but said, no, we're going to have our own. We're going to continue with our own, but let's kind of get closer to that on revenue recognition, having one policy. So in 2014, they set a standard with a implementation date about 5-6 years out to say, we've given you plenty of time to prepare for this. This is going in here as a way of letting any readers of this know, who know about that you're thinking about it, that this is something that's on the horizon, and even though it's not going to be, we're not going to have to think about it till 2019 next year, of which we'll audit in 2020, it shows that it's on your mind, but I'll point out, we don't expect it to have almost any impact for you guys in reality. You will have to go through a different thought process in how you recognize revenue. Well, you won't, Jennifer will. But in the financial statements, what you see in this end product should be very, very similar. You think of technology companies and how they recognize revenue over service contract periods and things like that. They're going to be the ones who are really, really impacted. Construction companies, whether you recognize at a point in time or over time, really impacted. But for you guys, the end result should look really similar.
To restate it in a way that makes sense to me.
Yeah.
In other words, other people have to and have been dreaming up creative ways to deal with the way they recognize cash flow, but we're pretty straightforward, and we never had to come up with some creative mechanism. So a change is not going to really impact us.
That's 99% right. Replace cash flow with revenue, because it shouldn't have an impact on cash flow, but yes, exactly.
Okay. All right. Good.
Yeah.
Good.
I just wanted to
No,
understand it a
that's a
little
great
bit
question.
more because it's an auditor question.
It's a weird one.
That's wonderful. Who else?
No,
Jeff?
thank you.
Yeah.
My question was just answered.
Okay. Cool. Any other questions? I guess that's it, sir.
Yeah,
Thank
yeah.
you again.
Yeah, absolutely. Thanks,
Especially thank you for another good year.
Yeah, well, thank you guys, absolutely.
Yeah,
For
it's,
working with Jennifer and coming out early, we appreciate that.
Yes.
And we understand you did that.
Yeah.
No additional cost.
My wife is an accountant as well. We have 2 kids. And I understand not wanting to get this done before a baby comes. My wife had a baby right before she went through her audit, and so she had a few weeks and then went back into work. I was like, no, we're not going to do that.
Yeah.
Yeah,
Thanks so much.
Absolutely. I'm leaving a few business cards if you have questions, especially while Jennifer's out. Let me know anytime. Thank you, everybody.
Cool.
Thank you for answering some of that. It was just kinda
Okay,
like,
thanks, Carol.
Wait a minute, they're normally always the same.
Yeah, good questions. Thanks.
Drive safe. Okay, let us move to the GM's report. And Mitch has a sad family responsibility to take care of today and tomorrow, and so he's not here. And Brian has agreed to stand in his place. So we appreciate your attendance. Thank you.
You bet. So I don't have the depth of knowledge that Mitch has on all the different departments, so I'm just going to highlight a couple items from the various managers' reports that go in to make up the general manager's report. Of course, I forgot my glasses, so I'll be leaning back so I can read.
Anybody got any readers going in? Here.
Oh, man. Oh, you know what? I'll take these ones. Okay. Bifocals I'm not very good with.
Okay.
Those are just readers.
Yep, that's perfect.
Okay.
Thank you. Oh, yeah. Thank you. Yeah. Wow, words.
Words.
Cool. Yeah, so it's just some things that I kind of, when reading through Mitch's report, that kind of struck me that were interesting. In the from the accounting department, the fact that we have only 31 payment plans right now compared to 54 at this time last year, and that all are being honored.
So does that mean that those others have paid themselves off?
Yeah, they've gotten to a point where they don't need a payment program. So, wow. And this is the stuff we talk about in our weekly meetings, and it's been really interesting to see over the last couple of years. Jennifer reports on these every week, and just to see these numbers consistently going down. There were always forever there was a chunk of people not honoring these programs, the payment programs. So. Two things: to see the fact that there's so many fewer that we even have, and the fact that all are being honored, I think is really impressive. And I'm pretty sure it's Davey who's responsible directly for dealing with that.
And so, I mean, I'll ask you, and I'll ask also Carol to convey our continued. I keep saying this because I keep hearing these good reports, but please convey my sincere thanks for a really good job that she's been doing since she came on board.
Fabulous job. She follows through consistently. Yeah, our collections person is, first of all, compassionate and very helpful, trying to be very helpful to homeowners who are having difficulties. And every now and then, somebody runs into an unexpected event.
Yeah.
And they just can't make the payments, but if they call and work with her, she comes up with credible and good payment plans that make their life a lot easier. So please, if you have issues, work with her. It's part of our policy is how she handles it, but she handles it with a lot of finesse. She does it really well.
Thank you.
Okay. On the HR side, Lisa's department, one of the things that stuck out is that they've issued over 400 access cards just this month, obviously related to the fact that all of our homeowners are going to have access to the recreational facilities, so the pool and the health club. So that's a lot of cards.
That's a lot of cards,
Yeah.
and that may turn into a lot of traffic.
Yeah, which is phenomenal. I think that's what
superb.
everybody's hoping for. Yeah. On the golf side, we've had some really good successes with our new our property owner membership drive. We've had 52, or more than that by now, but 52 new memberships sold. So that's 52 new members, or members that were participating at a lower level that decided to step up to full membership. So Along with that, I've kind of challenged our staff on the golf side to step up their engagement, because the big, to me, this program seems successful right now, but it will really be, the true measure of its success will be how many our rate of renewal. So next year we'll see, we're shooting for an 80% renewal rate. So if we can get these people who we've kind of hoping to somewhat set the hook on this year, to get them interested and get them in on a good value, if we can get them to use the golf course a lot and then renew next year. So we had our first activity that was the idea of one of our staff members, Mike Fields. His idea was to have a free clinic. So we had a free golf clinic and then a social hour afterwards where we invited all the current members to come and interact with the new members. So that was on May 5th, tied in nicely with the little Cinco de Mayo, and it was well attended. We had over 20 members, 20 of our new members take part. So it was successful, and we're going to continue to try and do monthly throughout the season, to do monthly engagement activities to get the new members engaged. So on the turf care side, Jacob and his crew have the golf course in phenomenal condition. Mother Nature has been very kind this month. She was not so kind in April. She was downright ornery, but this month has been perfect weather, and the golf course is in phenomenal condition. So Jacob and his staff have done a wonderful job taking advantage of it.
Just a quick question. Are you concerned at all that we're having such dry weather in a month that, in my short experience in the state, is relatively wet?
Yeah, no, we can make rain. So we prefer
we do have Lake Louise.
We prefer to make our own rain.
Yeah.
Yeah. When we have control over it, it's much better. So,
okay.
So,
okay.
Yes, Mike.
Brian, I think that you should bring up Chuck's army of volunteers.
Yeah.
A lot of work with on the golf course.
Use your mic.
Yes.
Mike, use your mic. Mike.
I can jump in. That's enough. Yeah, I heard you. Yeah, so I'm not sure how many people know about Chuck Luttrell, who is one of our golf members, who is kind of the, he came to me a couple years ago. He was going to become the Greens chairman, and he asked me what he could do, and I said, well, you could coordinate volunteer efforts. And I did not know what I had started by suggesting that. I mean, the guy has just been unbelievable. He is like Energizer Bunny, Chainsaw Chuck. We've got all these names for him, but he himself is involved in every project that he organizes, and he's had literally hundreds of community members, many non-golf members, also coming to help out with his efforts around the golf course. They're just too numerous to mention, but I mean, even just today, of course, he was up painting one of the restrooms on the golf course, and just
a wild idea. Do you have any idea how much we would have had to pay if we were going to get that?
He's got the hours logged, and Eric may know it's well over 700 hours. So that
in like 1 month or 1 year?
No, that was last season. So
last season.
Yeah. So I mean, quick math is $7,000.
Yeah, quick. Even if it was like minimum wage.
Yeah,
that's
it would
still
be,
a chunk of change.
It's over $8,000. So, and the cool thing is it's stuff that we just on the golf side we can't. When we're setting our priorities with the funding that we have, there's just certain things we can't get to that we'd love to do, and a lot of it's the stuff around the edges. That we're going to fund this stuff down the middle first, greens, fairways, tees. Then we get to rough, then we get to bunkers, and then the stuff like
and then the flowers around the sides.
Flowers around. I mean, those are stuff that falls by the wayside, but that's where Chuck's really stepped in. Clean up flower beds, installing new beds. So. His efforts, and Mike's right there with him. I mean, Mike's dang near in every project he's doing. So it's really impressive, and he's helped really to harness this passion that the golf members and non-golf members have for the golf course. So yeah, we recognize him a lot at the golf course level in our golf club meetings, but it would be good for the community to know what an amazing
And
effort.
if anybody wants to volunteer on those efforts, like at the flowers and whatnot, they get in touch with you?
Get in touch with me. I'll put them in touch with Chuck. And
could I add something there? Chuck is organizing volunteer efforts that are apart from the golf community also. For example, right now, he and a small group of volunteers are replacing the flagpoles out in front of the gate by the guard shack. And that is at considerable considerable volunteer effort
Yeah.
and expense.
Mhm.
And I think that we really need to invite him here sometime to report to us like he does to the golf committee, his annual figures, because it is absolutely stunning the amount of data that he is able to report on with volunteer hours.
It's just occurring to me, you're head of communications, could you arrange that, please?
I will make an effort.
Yeah, I mean, you know, it's his time, so.
Yes.
But I'd love to have him here and make a report on what he and all the volunteers are doing. And a couple of hands are raised. I see Mike and Linda. Mike, go first. He's deferring to Linda.
Just a question for you. There's a note in the golf department about the marketing consultant. Could you tell us just a little bit more about it? Because it says, it was posted on social media. What social, is it just local here or whatever?
Yeah, certainly. I have contracted with an individual who has a marketing firm, and his specialization is social media marketing, which is a big gap for me. I've been marketing golf for 25 years, and while I'm somewhat of a user of social media, the idea of having the understanding, the ability to effectively market using it, I do not possess that skill. But I know it's important, and so I've contracted with this individual, and the big thing I'm skeptical, and was the challenge I gave to him was I want to see some metrics and some proof that the efforts and the money that we put into this have results. So he's on a 3-year deal, a 3-month deal, and so we're going to reassess after 90 days, and he's going to. He's confident that he's going to be able to show me that the money that we put into it, that we'll more than recoup it. And one of the example I quoted here was we've tried to, we have a Facebook page for the golf course, and we post periodically, not expertly and not frequently enough. So there's ways that you're supposed to do it that we're not that great at. We try to, so we have a commercial that maybe you guys have seen on TV that I had made a couple years ago. It's a really cool 30-second ad with some great drone footage. We've posted it on our web on our Facebook page before, and had got like a couple hundred shares and views, and so he posted it and did used some techniques called boosting. Some you may be familiar. It's what people who advertise on Facebook do, but I think less than a week in, we'd had 1,800 views, and I think now
18
I think
over
now,
a couple.
I think it's actually I think now it's over 4,000. Yeah, so he has techniques and ways that far beyond my skills. So yeah.
So that's views. If you noticed any increased income as a result of all
Nothing that we could track to it yet. This is phase 1, and he's got a plan. The next thing we're going to do, I don't know how much into the weeds you want to get, but the next thing is going to be an offer. That was just a view, and then the next one's going to be an offer. So we're getting into where we'll be able to track results shortly here. So.
Okay, thanks.
Yeah.
I just was wondering about it, that's all, because it sounded like something different than we've ever tried before.
It is.
It
yeah.
is. It's a good thing sometimes.
Yeah, he's
Mike.
great.
You good?
Yep.
Okay.
And then one other thing to let's see, I think Mitch touched on it somewhere here, but it sounds like we have hired a rec manager. I was able to be involved in her second interview, was very, very impressed with this young lady.
And she worked where before?
So she was with the city of Ferndale.
Blaine.
Ferndale first, and then currently with the city of Blaine.
Oh,
yeah, she,
okay.
right out of college, she went to the city of Ferndale. She's now with the city of Blaine. Very, very involved in the. She's in the planning department, I believe. But knowledge, really cool knowledge. Even during college, she did some work at her UW. She went to UW, the Snohomish County campus, I believe, and
Bothell
Bothell, yeah, Bothell, yeah, and she had some cool experience there in terms of setting up a little health and activity center on campus. So, and just smart. I mean, she just seems really, really smart and very personable. I think she's gonna be fantastic. And she starts.
Do you know when she starts?
May 29th.
May, the end of this month?
Yeah. Yeah, so we're excited to get, I mean, for me, I've been in Sudden Valley for so long that I remember the rec department. We had a thriving rec department, and so many great benefits to the community having that rec department. So it's really exciting for me to see the potential of us rebuilding that program, and I believe that she'll be a wonderful person to head that effort.
I'll add at least what I heard from Mitch is that she has a special love of parks and trails.
Yes, she does. She's definitely has an affinity for
parks
parks
and trails.
That's
really exciting. To me, that's exciting because it's not something that we've ever had staff focusing on before.
No, we've never had ownership. Even when we had a thriving rec department, we really never had anybody that owned parks and trails. And I think this new mandate that she's been given by the community through the SGM, I think is going to be really powerful. Yeah, so I think we're all excited as a staff to bring her on. Yeah, so that would be about it for me on the report. Are there any questions?
Yes. Don't you have something else in your department?
We do have a new staff member coming on, Scott Thompson. Yeah, we hired a new golf pro, so he's going to be working under me. And going to be starting May 29th as well. He's coming from Skagit Golf and Country Club. So we're excited to bring him on. He's a PGA member. He worked through, he's relatively young. I think he's 32, 31. And worked through his PGA apprenticeship really quickly. So he's a member of the PGA. He has full membership status with the PGA. So and a lot of great experience on the private side, which I think is gonna help us since we're kind of shifting. We're a semi-private golf course, but and always had the bulk of our revenue coming from the public side. Mm-hmm. But I see us kind of in the middle of a shift to becoming a more member-centric golf course, and I think that his experience on the private side.
When you say member-centric, do you mean golf member or Sudden Valley member?
Sorry, golf member.
Golf member.
Yeah, which are primarily, I mean, the vast majority of our members are, so it's kind of almost one of the same, our community members.
Thanks.
Yeah.
No, I have nothing.
I'm sorry.
I'm good.
Oh, Carol?
What was his name again?
Scott Thompson. Yeah.
Any other questions? Yeah, thanks, Brian. That was a good GM's report. You should come more often.
I wouldn't want to take it away from Mitch.
Okay.
I have a point of information about the hiring of the rec manager.
Oh,
which that was mandated by the special general meeting.
Right.
The election.
Yeah. Okay, so let's go to the treasurer's report.
The minutes are,
It is, but you need to talk into it.
need to get it closer.
Yes, there you go.
There you go. Oh, thank you.
You see, I'm almost swallowing mine.
Yeah, I know, okay. So, first of all, the minutes are posted online as submitted. Also, I have a capital request here tonight. I'm going to make a motion and I would like to explain the background. So, we would like to make a motion that the board of directors authorize $21,128 from the roads capital account for construction management services for the 2018 culvert construction.
Second.
Moved
Thank you,
and
Mike.
seconded. Okay, discussion first. You made the motion, so go ahead.
Yes. So earlier this year, we approved the construction of these 6 culverts. And if you will look on page number 41 of your packet, you will see that we approved it. And this comes right out of our 10-year stormwater improvement plan.
This, what comes?
The numbers on page number 41
Okay.
come directly out of our stormwater plan that was created by Wilson Engineering. We have a 10-year plan for what culverts will be repaired in what year and what the cost will be. And I'm going to point out a couple of things. First of all, you'll see that it says the amount is $80,800 for the first one. That would be the removal and replacement of existing culvert 447.1 and 447.2. That is the number that was precisely on their list as what it would cost. Typically, we add 20% to that, and the contingency. And the reason is because we don't know what we don't know. We have some culverts that have pipes going through them. We don't know what they are. Are they gas lines? Are they sewer lines? Are they whatever? And we have several of them that are like that. So we normally add a 20% contingency in case we have to replace something or do an elbow around it or whatever. So until it goes out to bid, we have to have that extra cash in case we need to do more work than we anticipate. And you'll note that every single one of these was to have had a 20% contingency. We didn't add that contingency.
So even though the page 41 says contingency included, in
Correct.
fact, it was not included.
That's point number one. Point number two is it also says this includes construction management. That was not added in either. So the $329,088 was strictly the amount of raw initial cost was anticipated for those culverts, with no additional contingency and no amount for the construction management. So that's the bad news. The good news is that the bids have come back on these culverts already, and they came in at $314,000 rather than the $329,000. So right now, until we start actually constructing, we don't anticipate that we're going to be over budget on that portion of it. We have $15,000 in contingency in the event we do find some unknown that we weren't prepared for.
So in other words, the amount
The
that
difference.
was, the amount that was approved has an extra 15,000 in it
For the construction component.
compared to the
Yes,
bid, and you're
yes.
using that as a contingency.
As our contingency. We feel at this point they didn't find anything too outlandish that they were going to have to do, and so we anticipate, unless they run into some error, some problem while they're actually doing the construction, we feel that the 15,000 should be enough for contingency. However, it does not cover the cost of the construction management component. And this is someone who oversees the specifications, makes sure it goes in correctly, and it's very much a part of all of our construction activities. So this $21,128 is strictly for the construction management component of it. And I will accept any other questions you might have about it. Yes, please, Linda.
Just a couple of things. Who's going to do the management? Is that going to be Wilson?
It will be Wilson
It'll be-
Engineering,
It's going to be
yes.
Wilson. I guess my biggest question is I went and looked at all of the numbers that you have, which were also on the 10-year plan.
That's what I was saying. These are the ones that are actually on the 10-year plan at this amount without the contingency added.
Here's what I was going to say. So when we put the special assessment forward, we were missing the construction costs that would be over that 10-year period then, the management costs.
True, and I'll just have to say, let's move on, because
Oh, I know.
that didn't pass.
I know. I'm
It
just
didn't
saying,
pass.
it's just something to look at. It's just
We
a
need to
little
be,
disconcerting.
we need to be cautious. When we
Yes.
put numbers out, we need to be cautious.
That was all I wanted to clarify. That's all,
Noticed some errors and corrected them.
you know.
I have nothing else, so
Okay.
call the
Are there
question
any-
unless
are there
there are
any
other questions.
questions?
Call the question.
The question has been called. Is there any objection? All in favor, please indicate. Any opposed? Of course not. It's approved.
Thank you. All right, and then the financials for April are also included. Inasmuch as Eva is not here tonight, I don't think there's a whole lot of, to explain on this. I will tell you that one thing that we are doing, and this is just the portion that we normally give to the board. So there's a full-fledged portion of financial statements that are posted on the website. And one of the things that we are doing differently this year is, from now on, I'm going to explain from now on. We've been posting every single month when we could, the financials for each month in the views. And I think even Brent can admit that it's pretty daunting to see pages and pages and pages of numbers. I think unless you're an accounting nerd like we have many in our community, but there aren't too many, and most of them aren't really poring over them. And since we have it available on the website, we decided to do something a little different for the months which we don't post financials. So we will continue to post financials quarterly, which is a requirement of the bylaw. However, on those off months, we are going to put one report in and explain it.
Now, is that a report from the quarterly, or will that be a current month report?
It will be a current month's report, okay? So for this month, for the going into the views for June, Eva has put together a copy of the cash report, or the capital report. And she's identified it with labels, and we've talked about what each label means. Now, you won't get the full explanation on the report in 1 month. You'll have the second half the second month, because it can be daunting if you've never looked at financials before. We'll see what kind of feedback we give. If people don't like it, we will change. We want to hear from you if you don't like the way it's handled. But we will always put the link there for you to go to the full financial if you prefer to do that is online.
I think it's an excellent idea for helping to educate people and familiarize them with the numbers. May I suggest, and you can tell me if I've forgotten or not known that you've already done this, but it would seem to me a good thing to run your articles by the communications committee to see if they have any suggestions regarding readability and understandability.
Okay, we'll try to get that to the communications committee, but we want to get it into the views.
Yeah, deadlines are
which
deadlines,
means,
yes.
We
Yeah.
got to get it in pretty quick.
Yeah, of course.
Yeah, okay. Well, I'll work with Eric and see what he thinks. Eric is going to review it as well, yes, Eric?
Yes.
So he will be reviewing it.
Since he's
And
on.
He's already looked at
Since he's on finance as well, yeah, that
Yes,
makes sense.
yes.
Yeah.
Yes, but that's good feedback. We certainly, it would be nice to hear somebody who's not familiar with the finances to see if, does this help or is this even more confusing? That's all I have.
Okay. All righty. Committee reports. ACC. No one's here from ACC. Oh, yeah, and Rich, I'm realizing he didn't send this to me noting that he would be not here tonight, but he did send something around that said that he would be unavailable because of travel for ACC meetings. So I guess that means he can't be here for board meetings either. Okay, I had forgotten that. So let's skip over ACC.
Well, they did have a proposal there for changes to the ACC
Who's going to
policy.
present that?
Well, okay, it is included in the package.
It's in the packet, but we don't have a presenter. So without a presenter,
Could I make a motion to some effect?
you can make whatever motion you'd like. Let's hear it.
I am not on ACC, but I know a few people who are.
What's the page number?
Page number 48.
48.
48 to 51. It looks like there's only one section there in red which has changed.
Right. What seems to be most significant in the proposal, and because there's no one here to properly present it, but most significant would be the change to the concrete placement hours. And because we're moving into the building season and it's important for trucks, if you want to order concrete, you've got to be in line to order the concrete. Sure. You have to be, yeah, I'll just shift over here. You have to be in line to order the concrete, or to fill your truck early, and to be able to give the ability for mobilization at 6:30 and placement at 7 o'clock, which would be a slight change to our current rule. I think that would help builders complete projects faster, and that seems to be what the notice in red is about, where they want to see an improvement in progress. And so my motion would be that we, until this is properly presented, that we allow the concrete placement hours to be adjusted as noted in this policy.
Okay, and that would be at page 46, starting at...
Page 48.
I'm sorry, 48, starting at...
concrete placement hours only.
1A, 14.7.1, paragraph C, concrete placement
Paragraph
hours.
C.
And you're
So Monday
suggesting
through-
that through the last bullet point, not including the red?
No, my proposal was simply to allow, until this is properly presented, an ability to increase the hours for concrete placement, only those two lines.
Oh,
Monday through
okay.
Friday, mobilization 6:30 a.m., placement 7 a.m. to 7 p.m., and Saturday, mobilization 7:30 a.m. and placement 8 a.m. to 6 p.m.
Thank you for the clarification. So that has been moved as,
Second.
let's approve that on
Narciso, second.
a temporary basis, and David has seconded. Moved and seconded. Now, discussion, Mike and Carol. Mike?
Well, not specifically about that, but as far as the hours are concerned, I'd like to see the board, as a recommendation, take that out of the ACC. I do not believe it should be the purview of ACC to dictate hours for construction. I would like to see that go back to admin and construction, our construction person, and get it out of the ACC so that it's not, but again, that'll have to be at a different time now. It's just for...
That doesn't necessarily, in other words, you're speaking against the motion because, not that you disagree with the concept, you disagree with putting it in as an ACC issue. Although in this motion, it doesn't necessarily refer to ACC. It's just a question of changing our existing requirements.
Yes.
Okay.
And I apologize for bringing it up, but I would just like to have us as a board consider that in the future.
Thank you. And personally, I'll have to say I totally agree. It's not an ACC issue in my opinion. But nonetheless, the motion before us is to temporarily adopt these changes in the hours regarding concrete placement. Is there any, yes, ma'am.
The whole problem is if you only do that one section, I don't think I don't think any of this, the rest of this, where they have to give 48 hours notice to the homeowners all around the site and everything else is included in that. So if you're going to include that, I would say if we're going to change this and you're going to have people in the valley really early, that this whole notification thing that didn't exist before is just as important to the people that already live here.
Okay. Yeah, unfortunately, I can't speak to what is in our current requirements, but what I'm interpreting your comment is as a motion to amend the motion and add those bullet points starting at 48 hours notice going all the way down to, well,
Number two, really, it's
actually the communication, everything down to not including the flaggers bullet, because that's a different issue entirely.
I agree, because it talks about notifying admin and every, if I'm the.
Well, so in other words, that's your motion to amend?
Yeah, I think that that's just as important if we're going to change this
And I
because.
second that. We don't need to repeat that.
Right, okay, so that's moved and seconded, and now we're just on that. Is there any need to discuss that particular motion to amend?
Quick question.
Quick question.
So that, the motion to amend includes the bullets down to the one about the flaggers and nothing, not including flaggers and not including the mention of fines.
That's my understanding. It's notice to the community.
Okay.
Absolutely, that's all
Okay.
I'm concerned with.
I could
Who
support
else?
that.
Carol?
I'm really confused by this because it looks like we as a board are trying to pick and choose parts of this because there are three or four pages of changes
Can't hear.
amended.
Yeah,
Sorry.
you need.
And I'm uncomfortable approving pieces of it without the rest, because I don't know what ties together and what's been communicated to. I'm feeling uncomfortable with approving it, period. So I guess I would vote it down.
Okay, thank
From
you.
that standpoint.
Mike?
Just to Director Holton's concern, basically, I believe what Director Trower is trying to implement is that inasmuch as no one from ACC is present to present this in its entirety, and we're not sure when Rich is coming back, or when the ACC member is coming back, that he would like to at least allow those bullets to go forward now, because we are in the construction process, and if we don't allow those to go ahead, that some of the builders that are counting on having the ability to do what this simplifier says, there's a word there that I forgot. What this says, that they're going to be left out in the cold. So that's why not all of this, but when the ACC member comes back, then I suspect that in its entirety, it will be brought to the attention of the board to be voted and discussed.
Just a question of clarification to your comment. When does dirt work season start?
June 1.
June 1, and our next board meeting is not until after June 1.
That's the purpose of my motion.
Okay, any other comments?
Question on the amendment.
Question is called on the amendment. All in favor of including?
Could you be clear, could you clarify the amendment again?
Yeah, the amendment is, the original motion was regarding the paragraph C, concrete placement hours, and the next two lines, Monday and Saturday, Monday through Friday and Saturday. The amendment is to add the bullets immediately following those two lines, all the way down until it says first means for contact is phone call, voicemail, et cetera, et cetera. All those bullets would be added to the motion.
Okay.
Now, all in favor of adding those bullets to the motion, which we're not voting on yet, please indicate. Oh, okay, so that is unanimous, so all those are added to the motion. And now we can talk about the motion as a whole.
Call the question.
Okay, question is called, then unless there's an objection,
Now,
the motion as a whole is to basically allow staff to allow contractors to pour concrete earlier than they have been able to in the
in
past,
accordance with just what.
in accordance with these timeframes. Okay, so everybody understands the motion. All in favor of the motion, please indicate. 1, 2, 3, 4. All opposed to the motion, please indicate. 2 opposed to the motion. The motion does pass, so those hours are in place now. And whether they're part of ACC or not is not relevant. They're just, staff is instructed that this is permissible. All right, so I'm going to go ahead for staff's convenience. Give this to the secretary. Okay. So that's ACC, proposed policy changes, Communications Committee. We're done with ACC, Communications Committee.
Yes, sir. We have one request for a new member approval, Mary McIntosh, for the committee.
Mr.
Could you say that again? Apparently they weren't hearing you.
We have on the agenda request for member approval, Mary McIntosh for Communication Committee.
Mike, do you have I mean, you're wig-wagging your hand.
I apologize. We actually have two, because we have another volunteer form that has been vetted for the communications.
She's already on communications.
I just got it. Okay.
It's not on the agenda, so let's,
New member.
Yes, but she's
No,
only for emergency preparedness. No. I see what you say in the volunteer form.
That was handled months ago.
Okay.
oh, okay. I don't know. It's not in front of us right now, so.
Okay. My apologies.
That's all right. So what's in front of us now is, as you said, what?
New member approval for Mary McIntosh for Communication Committee.
Okay, is there a motion to approve Mary McIntosh as a member of the Communications Committee? There is no motion to approve? Okay, so she's not on the committee. We can't make a decision on that. Okay, you have anything else?
No, sir.
Okay. Document Review Committee. We had a meeting last month where we began to go through a list of possible ideas for revising documents. Really, it was just handing out a list of possible issues. We met last night, so there are no meetings from last night. We went through, or no minutes, excuse me, from last night. So we, I can just say, we went through that list and said, you know, what are urgent, and threw out a bunch as not being urgent or not being a good idea, and I'll get those minutes as soon as possible. And we have another meeting scheduled for, remind me, it's the first
Wednesday
First
next month.
First Wednesday in June, 6:30 in the kitchen area, Ken's kitchen area of the barn.
June 6th.
June 6th. Thank you. Okay, Emergency Preparedness Committee.
The minutes are posted online, but we do have a motion for a new member. Sharon Wash. Amon is been vetted for new member for EPC. And as I look at the date for the Communications Committee that I thought was this month, it's last year. Man, cold. I know. And Sharon, I apologize for that. Anyway.
I would make that motion.
I'd second it.
Thank you.
Okay, so without objection, then why don't we just say that that's approved by acclamation? Okay. Anything else from EPC?
No, sir.
Thank you. Long-range planning has not met. We still need members. Nomination and election.
The SGM certification was completed. It's posted online under the entity information rather than minutes for that meeting.
Will that be put in the views?
I believe Brent is scheduled to publish it in June, if he can confirm.
Okay.
I'm getting a head nod.
Yeah.
So that's kind of all I have. We're going to begin meeting in June to start looking at doing a review of the forms for the candidates, that sort of thing, and kind of hoping, crossing our fingers, to have some sort of update on our manual and stuff and where we're going to have to proceed for the AGM. But for sure, we need to look at the...
We do need to look at that.
Yep.
And that was, I'll cycle back to document review. The topic of the entity manual was referred to the document review committee. We had a discussion about that issue. It's not likely that we'll be able to come up with a completed revision to the entity manual. So the next likeliest in time for your schedule, so the next likeliest best path forward is for the board to simply approve using the method that was approved for the SGM. And it worked, then it's good enough for then, let's do it for the AGM. But that's not before us tonight.
No, and it will need to, but
We'll
it's
need
just
to,
to
I just
deal
wanted
with
to
it.
kind of explain, we did
Works.
discuss this, that's really the status, and that's likely the best way to go forward.
Okay, works.
Okay. Parks and Trails Committee.
Okay, although Parks and Trails are submitting to the board a new charter. The new charter, if you look on your page 52, you'll notice that parks, trails, and recreation have been rolled. Well, Recreation Committee has been rolled into Parks and Trails, is probably the best way to put that.
Right, yeah.
I'm not going to read this to you. You probably already read it when you had it in your packet for the week. Anyway, I make a motion that the new charter for Parks, Trails, and Recreation be submitted to the Board of Directors and approved.
I second it.
Moved and seconded. Is there any discussion? Yeah, it looks pretty straightforward to me. How about this? May I suggest that we accept by acclamation? Okay, accepted by acclamation.
Yes, I'm glad that you did that. I just want to thank Director Trower. If anyone's been in the lobby where admin is, we're talking about the fact that we have a new recreation director, Maddie Otley, on board starting next week. But next to the window of admin, there's a great poster that shows some of our trails and some of our parks. If you haven't seen it, please make note of it as you go by there. And Director Trower, I thank you very much for that.
Oh, I just suggested putting it there. It was the Parks and Trails Committee, Karen Borchert, that created it. And,
I apologize.
Yes,
I heard it was yours.
It was at the community,
Well, it's very nice.
The community days, and I just simply suggested, hey, people would like to see this.
Yeah.
And it's a map of Sudden Valley with all of the parks highlighted and blow-out pictures of each of the parks. And it's a really well-done poster.
Yes,
Right.
it is. And again, we'll thank them.
Okay. I see nothing left substantive except to ask if there are any property owner comments and board response, of course. Seeing none, then, looks like we have another relative. Oh. You want? We do have one. You better wave that hand sooner.
I'm Sharon Wash-Aman. I live at 25 Windward, and I heard that Chuck is also taking volunteers for stuff other than flowers, because I got an F in botany in college, and I don't do flowers, but I could help with flagpoles. Was there something about flagpoles? Okay, I will contact him. Thank you all.
Thank you, Sharon. Any other homeowner comments? Okay.
Yes. Oh, quickly, before you get into there, as a homeowner, Mike D'Angelo, 438 Sudden Valley Drive, we're talking about volunteers. We would be remiss if we didn't note Betty Driscoll, who has been pretty much single-handedly turning Gate 1's entrance into its former thing of beauty as far as flowers are concerned.
So she's been, the sign says there's a group, but it's really her?
Well, there is a group, but the group is her husband, Jerry, who sits back at home and kind of drinks coffee. Dolores, who helps when she can, but 99% of it is Betty Driscoll. And if I'm not mistaken, Ms. Driscoll is in her 90s. 92. 92. She has, well, I'm sure if you've come in Gate 1, you have seen her bent over her plants and cleaning up and putting bags of refuse on the side. She's a remarkable lady. And please, when you go through there sometimes, if she's there, stop and say thank you.
I've had a wonderful chat with her, only once, sad to say, but I did see her and stopped and we chatted, and her work is delightful and very much appreciated by me. I love seeing pretty flowers. Okay, anything else? I need a motion.
Second.
8:36.
Okay, a motion to adjourn at 8:36. We are adjourned. Thank you and good evening.